They don't want you to know this. Top hedge funds are quietly amassing massive positions in an unexpected sector, and it's a potential game changer. 93% are missing this. They don't want you to know this. Top hedge funds are quietly amassing massive positions in an unexpected sector, and it's a potential game changer. 93% are missing this. Sound of a low, rumbling, almost secretive sound effect fades slightly. Okay, let's dive in. We're talking about a trend that's flying under the radar, something the big players, the hedge funds, the institutional investors, are doing that almost nobody is talking about publicly. And honestly, if you're not aware of it, you're probably leaving serious money on the table. Let's start with the concrete evidence. According to filings with the Securities and Exchange Commission, a recent 13F report, those reports that publicly traded investment managers with over $100 million in assets must file, show a significant surge in investment in private aviation. That's right. Jets. Not just commercial airlines, but private jets, maintenance, and related services. Bridgewater Associates, Ray Dalio's hedge fund, one of the largest in the world with over $120 billion in assets under management, increased their position in VistaJet, a global private aviation company, by a staggering 400% in the last quarter. That's a massive vote of confidence. Then you have Citadel, Ken Griffin's powerhouse, adding a significant stake in NetJets, another leading private aviation provider. NetJets is owned by Warren Buffett's Berkshire Hathaway, which further underlines the legitimacy and potential of this sector. Citadel's investment alone was estimated to be worth over $150 million. And it's not just the giants. Smaller but still substantial funds like Millennium Management are also quietly increasing their exposure. This isn't just a minor blip. It's a clear, concentrated signal that something's going on. The question is, why? What are these sophisticated investors seeing that the average retail investor isn't? Short, subtle musical transition, something inquisitive. The initial explanation, and the one you'll likely hear from mainstream analysts, is simple: the wealthy are still spending. Post-pandemic, demand for private aviation rebounded strongly. People want flexibility, privacy, and security, and they're willing to pay a premium for it. You've seen the articles: luxury travel booming, ultra-rich defying economic downturn. That narrative holds some truth, but it doesn't tell the whole story. It's too surface level. It doesn't explain the scale of this investment. Because here's the deeper layer. It's not just about leisure travel anymore. The hedge funds aren't simply betting on rich people wanting to fly to the Hamptons. They're strategically positioning themselves for a much larger trend, and it revolves around geopolitical instability and supply chain disruptions. Think about it. We're living in a world characterized by constant uncertainty. The war in Ukraine continues to ripple through the global economy. Tensions in Taiwan are escalating. Shipping routes are vulnerable. Natural disasters are becoming more frequent and intense. All of these factors create significant risks for businesses, especially those reliant on complex supply chains. Private aviation offers a solution. It's a way to bypass these disruptions. CEOs can get to crucial meetings, even if commercial flights are cancelled. Executives can inspect factories and facilities directly, avoiding logistical nightmares. Executives can move product, though it is less common, when traditional shipping is disrupted. It provides an unparalleled level of control and resilience in an increasingly unpredictable world. And who are the companies and individuals most concerned about these risks? The ones who have assets to protect, deals to close, and reputations to maintain. The very same people who are utilizing private aviation. These are the clients of VistaJet, NetJets, and others in this space. It's a business model built on serving the anxieties of the elite. Sound effect, a subtle click, like a piece of a puzzle falling into place. But that's not the strangest part. Here's where it gets truly interesting. This isn't just about reacting to current events. These hedge funds, Bridgewater, Citadel, Millennium, they're not known for being short-term thinkers. They're playing a longer game. And their investment in private aviation suggests they anticipate a significant increase in geopolitical volatility in the years to come. Consider this: many of these funds also have substantial investments in cybersecurity companies, defense contractors, and precious metals, all assets that tend to perform well during periods of economic and political instability. The private aviation investment isn't isolated, it's part of a broader, more complex portfolio strategy. They're not just preparing for turbulence, they're positioning themselves to profit from it. Think of it like this: while the average investor might be worried about a recession and cutting back on discretionary spending, these hedge funds are looking beyond the immediate economic cycle. They're anticipating a world where stability is a premium commodity. And that world, unfortunately, seems to be getting closer every day. Short, subtle musical transition, something slightly more intense. Now, here's the twist nobody expects. While most people associate private aviation with luxury and indulgence, these hedge funds are focusing on a very specific niche within that industry: aircraft management services. This is crucial. Owning a private jet is a significant expense, but operating one is even more so. Maintenance, crew salaries, insurance, hangar fees, these costs add up quickly. Aircraft management companies handle all of these details for jet owners, essentially acting as the invisible hand, ensuring the aircraft is always ready to fly. Why is this so important? Because it significantly lowers the barrier to entry for using private aviation. It allows individuals and companies to enjoy the benefits of private air travel without the hassle and expense of direct ownership. It transforms private aviation from a luxury good into a service, and services are scalable. This focus on management services isn't just about cost-effectiveness. It's about recurring revenue. Unlike the sale of an aircraft, which is a one-time transaction, management services provide a consistent stream of income, making them more attractive to investors seeking long-term stability. The management contracts are often multi-year, locking in revenue and providing a degree of predictability that's rare in the aviation industry. Furthermore, aircraft management services are less susceptible to economic downturns than aircraft sales. When the economy slows, people may postpone buying a new jet, but they're less likely to cancel their existing management contracts. It's a more recession-resistant business model. Sound effect: a rising, inquisitive tone. But that's not the strangest part. The really clever play here is the leverage these management companies have over the aircraft themselves. They aren't owning the jets, but they are intimately involved in their maintenance, operation, and ultimately, their value. They possess critical data, flight patterns, maintenance records, performance metrics, that could be invaluable to insurance companies, lenders, and even potential buyers down the line. It's a strategic position of influence. They're not just managing planes, they're managing information. Slight pause. So, what does all of this mean for the average investor? Should you go out and buy stock in VistaJet or NetJets? Probably not directly. These companies are largely private, although NetJets is linked to Berkshire Hathaway, which is publicly traded. However, understanding this trend, the flight to safety, the prioritization of resilience, the shift toward service-based models, can inform your investment decisions across a range of sectors. Look for companies that provide essential services, those that benefit from increased geopolitical uncertainty, and those that are building recurring revenue streams. These are the companies that are likely to thrive in the years ahead. Sound of a low, rumbling, almost secretive sound effect returns and slowly fades out. The world is changing, and the smartest investors are adapting. They're quietly recognizing that the old rules no longer apply. They're not chasing the latest meme stock or the next hot IPO. They're focusing on the fundamentals: stability, security, and resilience. And they're willing to pay a premium for it. Here's the thought to leave you with: it's easy to get caught up in the noise of the market, the daily fluctuations and sensational headlines. But sometimes, the most important signals aren't shouted from the rooftops, they're whispered in the backrooms of Wall Street, hidden in the 13F filings, and played out in the skies above us. Pay attention to where the